Hey guys, welcome to the video. Today we are talking about Adobe stock and how it has gone down quite a bit over the past week. It's gone down about 16.95% over the past 5 days. Over the last day, previous day, it went down 8.44%, with the S&P 500 down 1.76%. So as you can see here, the yellow line is the market or the spider or the S&P 500 or whatever you want to call it, and the blue line is Adobe. So what happened exactly? Well, on the 16th, you can see there's this steep drop for the blue line Adobe. And what happened on the 16th was they released their fourth quarter results. So what I'm guessing happened is like maybe there was some insider trading going on before the 16th. So people already knew that there was going to be some bad news in that. People were starting to sell. The bad news hit, and then people are still selling because of that bad news. So what exactly was that bad news? So let's get into that. For this article that I found on CNBC, link to this is in the description, by the way. It says that Adobe plunges 10%, and this is on December 16th, and has second worst day in past decade on weak guidance. So the key points are that Adobe's guidance for its physical first quarter badly missed analysts' estimates, and it went down 10%. And this is the third time in December that Adobe shares have plunged, putting the stock on pace for its steepest monthly drop since June 2010. And also in the article, for the specifics, they say that Adobe said that its revenue in its first quarter, which goes through February 2022, will be 4.23 billion, and analysts predicted that it would be 4.34 billion. So everyone is expecting them to make 4.34 billion in revenue for the next quarter, but Adobe said, "Oh, we're not going to make that much. We're still making revenue, but it's just going to be 4.23 billion." So it's off by about 0.11 billion. So that's the main reason why it dropped. And also for the full year, Adobe expects sales of 17.9 billion, which is below analysts' average estimates of revenue of 18.16 billion. And also in good news though, for the fourth quarter, Adobe said that revenue climbed 20% increase in revenue to 4.11 billion, which beats the estimates. And also it's led by a 21% growth in the company's digital media segment. But this good news here, it just wasn't enough. People were more focused on this news right here at the top, so that's the main reason why it plunged. And also another reason why it went down, in my opinion, is that on Tuesday, according to the article, JP Morgan lowered its rating on Adobe from to neutral from buy. So they were saying, "Oh, Adobe is a good buy," and then this news came out, and it was like, "Oh, it's just like an okay buy." So yeah, that's the main takeaways from this article. And also, I want to go into their SEC filing, specifically their Q4 earnings release. I'll link to this is in the description, and I also go into their a few numbers from their Q3 earnings release as well. So yeah, you can check this out in the link below if you are interested. So first, we have their consolidated statements of income, or their income statement. Total revenue, you can see this is 3 months ended, all in millions except for per share data, but I'll just be reading the numbers here on the screen to make it easier. And you can see that for November 27th, 2020, a year ago, it was at 3,424. It increased to 4,110, so this is good. This number is higher than this number, so that is good. Also for the year ended, so you can see year ended November 27th, 2020, it was 12,868. Year ended December 3rd, 2021, so roughly a year later, it's 15,785. So total revenue is increasing. So this is a good thing. Also for gross profit, same thing, it's increasing. This number here is bigger than this number. This number here is bigger than this number. That's the main takeaway. So that is good. Also, income before taxes, it is increasing. This number here is bigger than this number of 1,468. That's larger than 1,197. So that's good. This number right here for the year ended 5,705, that is bigger than 4,176, so that is good. The main thing that you want to pay attention to is provision for or benefit from taxes. As you can see, last quarter they had a benefit from taxes. That's why this is in brackets. So this, they had like a tax benefit, but this year they had to pay more tax. They have to pay more taxes. So that's the main difference. Why the net income is less this quarter than it was last quarter. You can see this quarter it was at 1,233. Last quarter it was at 2,250 down here. But that is mainly because of this tax stuff. So they had a huge tax benefit last quarter. That's why their net income is higher. This year they don't have that tax benefit. This quarter they don't have that tax benefit, so their net income is lower. But the main way you can see that is that the net income before taxes, here you can see that the one for the latest quarter, that is higher than the previous quarter, so that's good. So main reason why it's down, and just to simplify it, is the taxes. So I mean, I'm not worried about that personally. Revenue is increasing, so that's good. So they should have enough cash to pay for their taxes. And yeah. Anyway, that was the statements of income. Next is the balance sheet. Here you can see I have an extra column here. This was taken from the Q3 report, so just so I could compare it. We have the balance sheets in millions, and here we have the ones for this December 3rd, 2021. We have the ones for a year ago here in the second column, and then here we have the ones for the previous quarter, Q3, here in the last column. So first in cash and cash equivalents, you can see that it did go down in the current quarter compared to the previous quarter and also last year. So right now they are sitting at 3,844 in cash. In from a year prior to that, it was at 4,478, and in the last quarter, it was at 4,623. But you can see that it's not that bad, because you can, if you look at total assets for the current quarter is at 8,651. Last year it was lower, 8,146. So total current assets increased over the course of the past year. Over the quarter on quarter, like if you compare Q3 to Q4, you can see Q3 it was at 8,619, and then current quarter it's at 8,651. So total current assets did increase overall, but the cash and cash equivalents, that did decrease. But why is that? That's because short-term investments, here you can see short-term investments, I'm guessing that they took some of their cash and cash equivalents and they made some short-term investments with that cash. You can see uh, latest numbers for short-term investments is at 1,954. And this is higher than the previous year and previous quarter, as you can see here. So yeah, that's looking good. Total assets, as you can see, that is increasing. This number here for the latest quarter, it's at 27,241. A year before, it was at 24,284, and also for the previous quarter, it was also lower at 2,600. 26,144. So yeah, total assets increasing, so that's good. Liabilities, that is increasing, but I mean it's not increasing like crazy. You can see that right now it's at 6,932. A year ago it was at 5,512, and last quarter it was at 6,191. So it's increasing, but if you compare total current liabilities to total what do you call that? Total current assets, the total current liabilities, that is less than the total current assets, so that's totally fine in my opinion. And also for total liabilities, you can see that total liabilities did increase. Right now it's sitting at 12,444. A year ago it was at 11,020, and last quarter it was at 11,730. But the thing is, total liabilities, that is still lower than total assets, so that is completely fine in my opinion. It's about total liabilities, it's like less than half the total amount of total assets. So the company is doing totally fine in my opinion. No worries. And yeah, my thoughts on this is that I would buy this dip. I mean, the financial statements, they look good. Revenue is increasing. People still like their products. The only reason that it's going down is like, oh, we're going to make, it's like the company is saying like, oh, we're going to make so and so money next quarter. And then all of these so-called experts, they're saying that like, oh, you're going to make that much. We thought you were going to make even more. So like for me, like I don't pay attention to those analyst estimates. It's just not, I just don't see them of any value in my they aren't of any value to me in my opinion, because like why would I pay attention to them? It just doesn't make any sense. So yeah, as long as the revenue is increasing, their numbers are going up. I don't care how fast or how slow it's going up. As long as it's going up, it is good. So that is why I would buy this dip. I see good news about this company, buy on the dip when there is good news. So yeah, buy the dip, but dollar cost average your way into it. I wouldn't go on all at once, as people like to say. It's like trying to catch a falling knife. So one new thing you could do is buy once every 2 weeks, or maybe once every 3 weeks, once every month. And during that time period, try to time the market and buy the low for that whatever week period it is, 2 week period, 3 week period, 1 month period, or whatever you want to do. And just do it as many times as you feel comfortable. And the main thing is to make sure that your position should be at a size that allows you to sleep peacefully at night. That's the main thing. Make sure that it takes up a percentage of your portfolio and you are comfortable with that percentage. And if you're interested in more about how to buy the dip, I have a video about that. Here, how to buy the dip and what to do when the dip keeps on dipping. I will link that video to this in the upper right hand corner. You should see it right around here, upper right. So feel free to click that if you are interested. And also, I just want to end this on quote from David Gardner, as he says, stocks go down faster than they go up, but they go up more than they go down. And the thing is, people like to zoom into this tiny part of the graph and make a big deal over these tiny drops, and they end up missing out on the big picture. So what do I mean by that? Well, look at this. Adobe for the past week, you can see down 14.73%. If you zoom in to this tiny time frame, everyone just panics and it's like, oh my god, it's crashing like crazy. My portfolio is bleeding. It's like, what should I do? Should I buy? Should I sell? Like, what should I do? They just go crazy. That's because they're zooming into this tiny part of the graph. But what they need to do is just zoom out. Look at this 5-year period. 5-year period, Adobe is crushing the market. It's up 430% over the past 5 years. Look at this. It starts in the lower left and slowly increases to the upper right part of the graph. So this is really nice, and they just zoom in to this tiny part of the graph. They just look at this part, they make it big like this, and then they just panic, and it's like, why are you doing that? It just makes no sense to me. So yeah, winners tend to keep on winning. Not always, but they tend to keep on winning. So in my opinion, Adobe, it's been going up. It's been beating the S&P 500 over the long term. It's going to keep on doing that. Most likely. Not 100%, of course, but that's my best guess. Anyway, I think that was it for this presentation. Yep, so if you guys are interested in my other videos and you haven't seen the promo slide, feel free to stick around for that. If not, I will see you guys in the next video. Thanks for watching, and I'll see you guys in the next one. Bye. So if you guys are new here to the channel, I just wanted to tell you guys about some of the other videos that I have. If you click on the playlist section, you can see that I have a lot of different videos here for you guys to watch. Two in particular that I would recommend watching is the Getting Started in the Stock Market. I have two right here. This orange one is for the fractional shares edition. So if you have access to fractional shares in your brokerage account, I'd recommend watching this. If you do not have access to fractional shares, I would recommend watching the whole shares edition right here, and you can check that out. And also, if you want to just take a look at the portfolios for these follow along portfolios, you can check it out in the Google Sheets below, along with some other portfolios that I made in the past, and that's also free. And if you want to see what I will be getting in the future for these portfolios, you can check that out for free on the Discord. So link to the Discord and Google Sheets is below, and there's some other playlists here. You can check it out if you're interested. I do some Your Questions Answered. I talk about how to buy the dip, some stuff wish I knew when I started investing, and there's also some other random stuff like workout videos and some Japanese stuff. So this channel, it's not 100% stocks. Occasionally I do upload a video that's just not stock related, but something else that I'm interested in. So yeah. Anyway, that is it for the video. Thanks for watching, and I'll see you guys in the next one. Bye.